Hey gang, Dr. V here, and I am your host, and this is episode 31 of the Ask the Doc Life Lessons You Should Have Been Taught in School podcast. Hi, I'm really excited about sharing this information with you. The purpose of this episode is to provide you with the steps you need to take to maximize your overall return on investment. And keep in mind that having a diversified investment portfolio ensures better long-term financial success. In addition, I want you to consider a few other things. One, do not allow short-term drops in the stock market to dissuade you from investing. In fact, when the market dropped recently 600 points, I doubled down on my growth stocks. Two, you have to be patient. As Warren Buffett has said time and time again, play the long game here. It's about patience, patience, patience. Forget about daily fluctuations of the market or trying to time the market. It can't be done. And three, employ multiple sources of income, which I outlined in a previous episode. The income side of this message should be used to further invest in real estate, stocks, or your side hustle. To get started, let's review the underpinnings of a diversified investment portfolio. Here's what you need to do. First, as outlined in an earlier podcast episode, you should invest in growth stocks and dividend stocks. Historically, the stock market has returned approximately 10% a year on average. Right now, prior to that uncalled for 600 emotional drop to the Dow Jones, most portfolios are doing much better than that. In fact, my growth portfolio was up 36%, while my dividend portfolio is up 28%. You want to look for companies that have an increase in revenue growth, an increase in share of market, and a sustainable competitive advantage. So which growth stock should I go after? First, open up a SoFi or a Robinhood or another account where you could buy fractional shares of expensive stocks, where you can call these large companies and ask them to give you information about their DRIP program, dividend reinvestment plan. Either way, you want to get started buying fractional shares. So which stocks? Easy. Amazon, Apple, Microsoft, Alphabet, and Berkshire Hathaway, and NVIDIA. There you go. Put a few $100s in each, $20 a week, and do it over 30 years, and by the time you're done, you'll have $1 million. Which dividend stocks should you invest in? Enterprise Product Partners, Reality Income, Gabelli Asset Trust, Altria, and AGNC. These stocks should return a healthy amount of money as they have for me. Set up an E-Trade or another brokerage account for these types of stocks. Now, a quick disclaimer here. I do not purport to be a licensed stockbroker, a CPA, or an attorney, or anything to that effect. This is on you. This is just merely my suggestion and my advice based upon my 25 years of experience in the stock market. So make sure you have somebody look over your shoulder and get some advice. Okay. Number two, launch a profitable business. I don't care what business. I'm not talking about a side hustle. I'm talking about a business. I recently bought one because I was interested in further expanding my network. So buy a business. The key is identifying a market need and creating solutions that resonate with customers. When attempting to launch a new product or service, simply ask yourself the question, if only there was a product or service that could, and then fill in the blank. Number three, create a side hustle or a freelance initiative. Side hustles include freelance writing, graphic design, web development, and social media management. Platforms like Upwork, Fiverr, and Freelancer.com are a safe bet. Additionally, consider turning your hobbies into income by selling stuff on Etsy or eBay. I have a friend who sells wine bottles that are melted down to be planters, making a lot of money, $7,000, $8,000 a month. So you never know. Number four, try to increase your primary source of income. Ask for that raise. Ask for a promotion. If you don't ask, you won't get it. Number five, save, and save some more. I know it's difficult, and I'm sure many of you can't do this, but you should be saving 15 to 20% of your income every week. If you start early enough in life, as I alluded to a minute ago, and you invest $1,000 initially, $430 a month at a 10% return, you'll have $1 million by the time you're in your 50s. Number six, get out of debt, particularly high interest credit card debt. Go after a loan consolidation, a debt consolidation loan, which I'm not really for, but if you must, you can do that. You could also transfer money into a 0% introductory rate credit card if you have good credit. What do you do with the extra money? You funnel it back into your investment portfolio. Okay, number 7, explore day trading and options to get serious gains. Now, option trading and day trading are serious business. They could lead to very quick profits, but very quick losses. Placing covered calls, or as it said, puts, is a risky business and should only be done by a sophisticated investor. Do not attempt this unless you get advice from a broker. Number 8, flip real estate properties. Real estate flipping is nothing more than purchasing undervalued properties, renovating them, and selling them quickly. This strategy can yield substantial returns relatively quickly, especially in hot real estate markets. The key to successful flipping is finding suitable properties and executing renovations efficiently and cost effectively. Number 9, buy your first rental property, as real estate investments provide a steady stream of passive income while potentially appreciating over time. Be sure to check with your CPA or an accountant about passive income laws and laws associated with owning rental properties. It's very important that you know about this. What kind of properties should you look for? Look for a $250,000 3-bedroom, 2-bath home. 1 bedrooms, 1 bath, difficult to sell. 2 bedrooms, 1 bath, difficult to sell. 3-bedroom, 2-bath, you got a family, they'll love it. So that's the ones I would go after. In fact, about 20 years ago, I owned 30 properties in Las Vegas under that exact scenario. So you never know, The key here is great property management. If you don't do it yourself, hire a professional firm. And 10, finally, focus on your net worth, not your income. Net worth is nothing more than your assets minus your liabilities, including real estate equity. Shoot for a goal of $1 million before you're 50 years old. Okay, that's it for now. Follow these simple steps to create generational wealth. And finally, remember this. Life will throw you curves. You just got to learn to hit it. This is Dr. V signing off.